Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, January 29th, 2022. The weekend is finally here. We had a pretty exciting and volatile trading week last week, so I hope you made some good decisions. I hope you followed your plan, and today is going to be the weekend update edition from my trades of last week. And then we're also going to take a look and go down through my watch list in this podcast, take a look and see if there's some interesting setups for next week. So, boy, what a week. Was a good week, took some new trades. And so, yeah, let's get into it. And before we do, I have to run the U.S. legal disclaimer. So give me about 40 seconds and then I will be right back. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Well, thanks for holding on there with me. So, yep, here's the plan. This is what we're going to do today. First of all, we're going to go through my current daily swing trades. We'll take a look where I entered them, why I entered them, how I'm going to manage them going forward, either to the upside or the downside. Then I have some weekly trades that I still have on, and we'll go through those. Same thing. And then also some monthly trades. I mentioned this in each podcast, but my trading philosophy has to do basically with three things. One, trading as many different types of markets as possible, trading as many different time frames as possible, and trading as many different strategies as possible, because sometimes one strategy will be working, one time frame will be working, and the others won't. So I like to try to hit it from all different angles, use different time frames, use different strategies, and then of course trade as many different types of markets as possible, even getting outside of equities like gold, bonds, silver, dollar, and so forth. All right, so we'll do that. Then we'll spend a few minutes. We'll talk about some trader psychology. Always the most important skill that you can develop in trading is the ability to create a plan and then emotionally follow your plan. And it's hard sometimes because you're losing money, you're making money, you start second guessing yourself. And really the best way to be a long-term profitable trader is to create a plan and just follow that plan through, win, lose, or draw. It's super important, and that's why the skill of being able to follow your plan is such an important skill. And I think it's the most important skill in trading. We have to learn how to trade. We need to learn about support, resistance, entries, exits, all this kind of stuff. But when it comes down to it, the real skill is in following your plan. So we'll talk a little bit about trader psychology. I have a poem from my friend Frank, wonderful poems, talks about stocks, but puts it in poem form. When I had the live stream podcast, Frank would show up every day and kind of like right on the spot write the poem. So what a gift, but we'll do that. And then after we're done with that, we're going to go down through my entire watch list, see if there are some potential setups for next week. We'll go through each stock one by one, and I will show you what I'm looking for. Essentially, the most important thing that I'm looking for are legitimate back-tested triggers, whether that's a deep dip buy, whether that's a return to value V1, V2, a higher low V1, V2, a crossover, double bottoms with bullish divergences. But we'll go through each stock and I'll show you. But it's very important that you have a confluence or a combination of indicators lining up on multiple time frames. That's the first requirement. Secondly, you have to have a good risk to reward. You never know if a trade's going to be a positive one or a negative one, but you at least can set yourself up and go, this trade's a little chasey, it's moved a little bit too much. I want to have those confluences and combination of indicators lining up on multiple time frames, and I need to have my line in the sand as close below me, so if I'm wrong the smallest. We don't know which trade's going to take off or which one's going to fail, but we do have the power to pick a good risk to reward ratio. And then thirdly, it's very important for me to have a complete trading plan regardless of the market that I'm trading, regardless of the time frame that I'm trading. And for me, that includes the following. Number one, I first always have to know position size based upon what the current market volatility is. If the market volatility is really high, meaning things are going up and down and there's large ranges, then I have to position size accordingly for that, and I have to position size with a smaller position. If the market is consolidating and the average ranges are smaller, then I'm going to use a higher position size. And really the key is just using the value of the 2 ATR. And I talk about this each podcast, but it's very important. So what I like to do is I like to take my maximum allowed loss. Generally, a good rule of thumb is 1% of your capital. So, if you have $50,000, 1% is going to be $500. If you have $100,000, 1% is going to be $1,000. So that's my maximum allowed loss. Doesn't mean that I'm going to hit that very often, but I have to have a dollar amount where I say enough is enough, and the enough is going to be a small percentage of my account. So here's Tesla, for instance. And let's just hypothetically say I'm using $100,000. 1% of that is $1,000. So what I would do is I take $1,000, divide it by the value of the 2 ATR. This is what takes into account volatility. It puts your maximum allowed loss 2 ATRs, or 2 standard deviations, away from where your entry price is. You don't want it too close because it's just noise and it could get there. So my maximum allowed stop I want as far away as possible so that it's less likely to get there. So in this example, $100,000, 1% of that is $1,000. Divide that by the value of the 2 ATR. Right here on, this is Tesla, it's 140.10. So 1,000 divided by 140.10, that's going to tell me to buy 7.13 shares. But if the volatility was lower, I would be buying more shares. If it was higher, I would be buying fewer shares. So kind of to circle back to what I was talking about, most important thing, first requirement for me anyway in any one trade is I have to position size based upon the current market volatility. Number two, I need to know where my emergency stop is, and my emergency stop coincides with my maximum allowed loss. So number one, position size based upon market's current volatility. Number two, know what your maximum allowed dollar loss is. Know where your emergency stop, know where your end of day stop is. Very important as well, because most of the time your end of day stops are going to be your main stops, not your emergency stops. I need to know where my intraday profit targets are going to be. I always take a partial profit when it moves up a certain amount during the day. I usually set 3 profit targets. Number 4, next I need to know where significant overhead resistance levels are, significant moving averages, significant RSI levels, Keltner channel levels, and then lastly, I need to have a complete trailing stop methodology or protocol in place for me, so that if I have a profitable trade, I don't give it all back. All right. So let's take a look right off the bat here. Microsoft, I did buy Microsoft back here, 126.22. I bought this when we had this big reversal day. It gapped up big, came back down, tested the 200-day moving average. That was my signal to buy Microsoft. My emergency stop is down here at 276.06. This is 2 ATRs below my entry point. Like we just talked about when I was position sizing, whenever I enter, I divide the maximum allowed loss by the 2 ATR. That tells me how many shares to buy, but it also tells me how far below my emergency stop is going to be. So bought here at 295.71, place my emergency stop down here 276.06. My end of day stop would simply have been a close below the 200-day moving average. So if I close below the 200-day moving average, that is my emergency stop. That is my end of day stop. And most of the time, those are the ones that you're going to hit. Now, fortunately, end of day stop did not come into place. Bought here at 295.71. It's 308.26. So from entry to current price here, it is up 4.01% in 2 days. So really nice trade so far on Microsoft. You can see I have the 3 lines here. One's dotted, 2 are not dotted. But what these are profit targets for Friday based upon Thursday's close. So I put one profit target here at 304.40, one profit target here at 308.96, one profit target here at 313.52, and I did hit one profit target on Friday, so I took 10% of the position size off. As it moves up, as it goes my way, I like to take partial profits, not the entire position, but just partial profits to help mitigate any losses if we turn back around. I think it's important in trading that you play offense and defense. Offense for me is selling into strength. Defense is selling, is like a stop loss. If things go down, if it moves 1.5 ATRs, then I go into trailing stop mode. But I left these up here just to show you for this podcast. So these were my 3 profit targets on Friday. 304.40, 308.96, 313.52, and I did hit one profit target and hit one profit target the day before as well, because here I entered, I put 3 profit targets up here, hit a couple there, and then hit one here today. So what did I say? That's from entry to exit right now, about 4.01% positive on this trade. And what I'll do, I will take today's closing price, 308.26, and I'll add 3 new profit targets to that for Monday. And if it keeps going up, I'll take a little off. So anyway, so far, Microsoft doing well, entered with the bounce at the 200-day moving average. That's my legitimate entry signal. Position size based upon volatility, like I discussed before, put my emergency stop down here. Had my end of day stop with a close under the 200, but it hasn't happened. So as long as this stays above the 200-day moving average, I will be keeping this trade. If it moves up, I'll take profits. If it moves up 1.5 ATRs from entry, and actually I'll just show you that right here, 1.5, let's see, that's 15.92. So I'm getting pretty close to trailing stop mode. If we have some follow through on Monday, then I will go into trailing stop mode, which means once it reaches a certain distance, then with trailing stop mode, I will get out and lock in half profits if I get a close below the previous day's low. So once I get there, then it's not all based upon the 200-day moving average anymore. So anyway, Microsoft doing really well. Very grateful for that. Okay, the Qs. I did take a new entry position on the Qs yesterday on Friday, the 28th. And what was the setup? Well, here's the setup. We had an under 30, over 30. You see, if I go to the previous day and we look here at the RSI, it's 23.48. And then fast forward to yesterday, now it's 35.09. So that's the legitimate entry point. And I like I said before, I like combination confluences of signals. So the entry, there was multiple entries, triggers. Under 30, over 30, that is one. Under the negative third channel, over the negative third channel. This is the negative third channel. 92% of prices hold here or go back up. And I like the close under, close back over the negative third ATR channel, in addition to the under 30 and the over 30. In addition to that, we have a V1. Here is day 1. Here is day 2. 2 goes under 1, closes above day 1's close. So 3 combinations here. Under 30, over 30, under the negative third, over the negative third, and a V1. And on top of that, actually, we closed over the 5 EMA, which is also really good. So I will go into trailing stop mode, 1.5 ATRs above my entry. So right now up here, 1.5 equals 15.28. So 15.28 from entry, oops, did that wrong. 15.28 is going to be right about a little under there, so right about there. So once I get there, I will go into trailing stop mode. But again, entry price here on Friday, 350.53. Why did I get into this trade? Well, the combination of everything I told you. Put my emergency stop down here, 331.41. Where's my end of day stop? My end of day stop will be a close below the 30 RSI, because the reason I took the trade was the close under and the close over the 30 RSI. So my end of day stop is just usually the opposite of why I got into the trade. So anyway, I like the sideways motion here on the Qs. I like that we haven't been able to go down and create a new low. So anyway, we'll circle back next week, see how this does. I did buy this at 350.53. It's at 351.80. So this one is up on the trade, even though I just took it on Friday. Next one, Tesla. Same thing on Tesla. What's the first thing I do when I'm looking for a new trade here? Right, I'm looking for the signals to get me into the trade. Well, the signal, multiple signals. One, we rejected the 250. 2, we intraday rejected the 200-day moving average. 3, we intraday rejected the negative third ATR channel. 4, we had a V1. Here is day 1, day 2. 2 washes out day 1. 3 closes above day 1's close. So those are the entry signals. But once I see the entry signals, how do I know how many shares to buy? Okay, I take good rule of thumb. Don't have to do this, but a good rule of thumb, 1% of capital of your total capital is your maximum allowed loss, divided by the value of the 2 ATR. That's 140.10. That tells you how many shares to buy. It's also the 140.10 is also the emergency stop below the entry price. So my emergency stop's down here at 706.25. My end of day stop is a close below the 200-day moving average. And then my trailing stop level will be 1.5 ATRs above entry. So right about, let's see, that's a little hard there, 105.07. All right, I have to eyeball that here for the podcast sake. But once I get there, then I will go into trailing stop mode. So really good confluence of signals on both of those new positions, the Qs and Tesla, and then glad Microsoft is doing well. Okay, so those are the dailies. Let's go to weeklies. As I mentioned, I like to trade different time frames, and this is I take weekly positions on Friday because that's when the weekly bars closed. Why did I buy the Russell 2000 on the weekly? Well, it went under 30, over 30. It rejected the negative, it rejected the 100-week moving average, also rejected the negative third ATR channel. So when I buy on the weeklies, it's exactly the same way to position size. Remember, $100,000, 1% is $1,000. But now I divide it by the value of the weekly 2 ATR, and the weekly 2 ATR's number is going to be larger, which means I'm going to buy a lot fewer shares because you have to factor in the larger. One bar of weekly is going to move much larger than a bar on the daily because there's 5 times more days. So you have to position size with a smaller position size, and again, just using the value of the 2 ATR on that particular time frame will do that for you. So I won't make any decisions until next Friday based on this trade, but the entry was under 30, over 30, rejection of the negative third ATR channel, rejection of the 100-day moving average. I bought this here at 193.20. It's 195.18. So already a little money in there. My end of day stop is going to be a close below the 30 RSI because I bought it because it went under 30, over 30. So my end of day stop, or end of week stop in this case, will be a close under the 30 RSI. And then of course I have my emergency stop, which is what? It's the value of 2 ATRs below my entry point. So this is, I don't know if this trade's going to be positive, but I have good lines in the sand underneath me. I've positioned sides correctly. I know where my end of day stop is. I know where my emergency stop is. I will go 1.5 ATRs from my entry above. For my trailing stop mode, that's 1589. So right about just a little higher than that. And if it gets there, I will go into trailing stop mode. And again, I just bought IWM yesterday at 193.20. It's 195.18. So it's up a little bit already. I bought it right before the market closed. All right. So those are the new trades this from yesterday. The Qs on the daily, under 30, over 30, V1, rejection of the negative third ATR channel. Tesla on the daily, rejection of the 250, rejection of the 200, the under 30, over 30, and the V1, and the rejection of the negative third ATR channel. IWM on the weekly, same signals, under 30, over 30, rejection of the negative third ATR channel. All right, here's MERC. So MERC, I did buy all the way back here on 12/10/21. Again, on the weekly, what was my entry signal? Entry signal was rejection of the 200-day moving average. I bought here at 71.90. Placed my emergency stop. End of week stop would be a close below the 200. Never got there. This has moved up beautifully. You can see the orange line here at $79 was my trailing stop level. It did hit that about a month ago, but I have not had a close below the previous day's low. Now it does have earnings on the 3rd of February, so I don't hold through earnings, so I will get out of MERC before that. Currently, this particular stock, or this particular trade, nice trade, up 11.18%. Did I know it was going to do that? No, but I just saw my entry signal, which was a rejection of the 200-week moving average, and I just sat with it. I take profits on the way up like I always do. But yeah, this particular trade, really good, especially in this market environment, up over 11%. But again, I will take profits before earnings. All right, let's go to the monthly bars, because remember, I trade dailies, weeklies, and monthlies. This has been a fantastic trade on EXON. Here we go. Intraday rejection, or intra-month rejection of EXON at 54.75. It went under the 200-month moving average, closed back over. Like always, I put my emergency stop. My end of month stop on this would have just been a simple close below the 200. Never got there. Placed my 1.5 ATRs above at 65.40. And you can see this has been a monster trade. I've been in this 1, 2, 3, 4, 5 months. Seems like a long time to be in a trade, but I like these longer term time frames. This has been a monster trade. Right now, this particular trade up 27.23%. All right, so those are the positions I have. You know, I always try to get rid of my losing positions quickly, keep my winners, let them grow. I use an analogy in the podcast a lot about having a garden, keeping the weeds out, and the weeds are losses. The more losses that you have, the more it can smother your garden. And in stock, in the stock world, the weeds are your losses. Your vegetables and your flowers are your winners. You want to keep your garden free of weeds. And so in stocks, you want to keep your portfolio free of losing trades. And then lastly, we have TLT. TLT, I did buy back on 10/29 with this V1 and a 520 crossover. Bought this at 147.96. It's 143.13. It's down 3.41% this month. And on the trade, it is down 3.05%. End of the last day of the month trading is Monday. Looks like the 5 is crossing under the 20 for a cross under, so I will get out of this. This is a weed. It's a loss. It's a small one, but it's a weed, and I want to keep my garden free of weeds and keep the winners. All right, so hope that makes sense on the trades. And let's go and see Frank's poem. I talked earlier about Frank. Please follow Frank at FrancoD over at on Twitter. It's a great channel. He writes wonderful poems, and go over, support him, and I know you're going to enjoy the poems. So let's see what he says. Today's market poem. When markets come unbound and go astray, common sense still rules the day. Though the noise and chatter will be on full display, what counts is you, the trader. There is no they. Stick to your rules and it will pay. Very important, everyone. Sum this up. Stick to your rules. Use good trading principles. Stick to your rules. That is your best path to being a profitable trader, but it's hard because it is hard to stick with your rules, but you need to do it, and it's a skill. One more time. When markets come unbound and go astray, common sense still rules the day. Though the noise and chatter will be on full display, what counts is you, the trader. There is no they. Stick to your rules and it will pay. Isn't that a wonderful poem? Thank you, Frank. Miss you, buddy. Miss seeing the poems every day, but I do like to talk about these here on this Weekend Update podcast and share these poems with people. Okay. Let's talk about trader psychology, shall we? Everyone that knows me and has been part of the live podcast knows it's such an important part. But, you know, I have my favorite Twitter channels, Facebook channels, just great channels that talk about trading, good trading methodologies, good trading words of wisdom, focus on trader psychology and how important that is. And today, this is from Stephen Goldstein at Alpha Mind 101. Stephen has a great channel. He has a great podcast, by the way, the Alpha Mind podcast. So if you follow Stephen at Alpha Mind 101 over on Twitter, you can see when he puts out a new podcast. He interviews all sorts of traders, different type of traders, some large traders, hedge fund managers, prop trading firms, retail traders like myself, and I was fortunate enough to be a guest on his podcast a couple times. So follow him at Alpha Mind 101. Let's see what Stephen has to say today. One edge alone is rarely enough. To succeed, traders need multiple compounding edges. These may include aspects of process, mindset, methodology, risk and money management, risk intelligence, emotional intelligence, market knowledge, personal congruence, self-awareness, and humility. You know, when it actually comes to trading, I want a combination of indicators lining up on multiple time frames. It's very, very important. The risk to reward ratio, the trading plan. It's very difficult to make money in the market just with one edge. You need as many possible edges alone. As Stephen says here, one edge alone is rarely enough. To succeed, traders need multiple compounding edges. This may include aspects of, and you need a combination of indicators from a technical perspective lining up, but you also need combination edges of your for your psychology and for emotions as well. So let's go through process. Yes, of course, you need a process. You need a good process of trading. 2, mindset. And this is just on the technical side, right? On the process. Mindset, you need a good mindset. That's the emotional side. Method, you need a trading methodology. Obviously, risk and money management, super, super important. Number 1, risk intelligence. You have to be aware of risk. Just want to mention, if you focus on profits and forget about risk, you're going to get the losses. If you focus on risk and you're obsessed with risk and not letting risk get out of control, then you'll get the profits. It's kind of a strange thing, but that is what happens. Emotional risk intelligence, emotional intelligence. You have to know yourself. You have to be smart enough to understand and maybe circumvent yourself sometimes as well. Market knowledge, yes, of course, you need to know about the markets. Personality congruence, very important. Self-awareness, you have to be self-aware of yourself and your emotions. And humility, that's a big one. Boy, when the market's doing well and you're calling your friends and you're telling them how you're doing, so great and all that kind of stuff, that's always a bit of a warning sign. Keep that in mind. And when you're really down in the dumps and the market's down and you're telling people, oh, I don't know if I can do it, that's usually, in my opinion, a market bottom. So thank you, Steve. This is all very important. One edge alone is rarely enough to succeed. Traders need multiple compounding edges. These may include aspects of process, mindset, methodology, risk and money management, risk intelligence, emotional intelligence, market knowledge, personality congruence, self-awareness, and humility. All right, thanks, Steve. That's helpful for me, and I hope everyone can keep that in mind. We need multiple edges, both in our trading and with our emotions. All right, and there's Frank's poem. Thanks for that, Frank. All right, well, let's head down. What I'm going to do is I'm going to go through each particular stock in my watch list. Some of these I already have positions in, so if I already have positions, I won't mark them. But we'll go down through, we'll take a look and see what could possibly be some interesting setups for next week. It doesn't mean that they've already happened, and we may have to wait for some things to happen. But if something looks good, I'll point it out. Apple, huge move off the bottom. Just fantastic. But Apple right now, what would I need for Apple? Well, Apple was way undersold or oversold. Now we're back in the value zone in between the -1 and the +1 ATR channel. For me to get interested in Apple, three things here. One, being that we're in the value zone, if we could pull back, retest the -1 ATR channel, look for a V1 or V2 trigger, that would be one trigger to get into this trade. Number two, if the 5 EMA cross back over the 20 EMA, that would also be a legitimate signal. Alternatively, if we head back down and go under 30, back over 30, that would also be a signal. So I don't really see anything that's close here. I actually did have this trade, and I had to get out before earnings, and unfortunately, I wish I would have kept it clearly because it's up 7%, but it could be down 7% as well. And I always want to focus on risk first instead of profit, and holding through earnings would have been the opposite of that. So a pullback, a higher low V1, V2 would be one for Apple. 520 crossover would be another approach to getting to Apple, or a under 30 back over 30. But I don't really see anything right now on Apple for next week that's close. Adobe, big, huge, bullish engulfing bar here. Looking for a higher low V1, V2, looking for a 520 crossover or a retest of the 30 RSI. So nothing on Adobe for next week. AGQ, wow, AGQ, look at this, just mountain up, mountain back down. For me right now, entries for AGQ for next week would be an under 30, over 30. Right now we're at 39.63, so an under 30, over 30 would be one possibility, or next possibility if we had a 520 cross back over. So right now AGQ either has to go lower for me to get interested, or it has to go higher and have the 520 crossover. So I don't really see anything on AGQ, but I will mark it in case we do go lower. But I would feel very comfortable buying AGQ with an under 30, over 30. So we'll mark that one. Amazon, boy, really been struggling here, hasn't it? But we've come back down. We're starting to go sideways, create this consolidation here. This was a valid signal on Amazon on Friday, and under 30, over 30, under the -3rd, over the -3rd. I didn't buy that one because I bought the Qs and I bought Tesla. I like those setups better, but sideways motion leads to trends. trends lead back to sideways motion. This is a perfect example of this. So this sideways motion will eventually lead to a trend. Whether it's up, I don't know, down, I don't know, but it will be. And when it's going to happen, I don't know, but eventually we will have this. I didn't get involved with Amazon because Amazon does have earnings on the 3rd, and I wouldn't hold through that. So if it was after after earnings and we had an under 30, over 30, I would buy it, but I'm not going to mark anything here on Amazon. ARC Innovations. Well, nice false breakout to the downside, nice V1. But we still were not strong enough to get above the 30 RSI. If we got above the 30 RSI, that would be a legitimate entry, so I will mark ARC. Boeing, I believe this did go under 30, over 30. Let's take a look. Yeah, it did. So it went under 30, over 30. False breakout to the downside from this low. This is a decent signal right here. But right now this signal has passed, so I will pass on this as well. Alibaba has earnings coming up, so I really don't want to get involved, but it looks like we did test this previous low down here. Yes, we did. And I don't think we went under 30, over 30, but we do have earnings, so don't really see anything right now on Alibaba. BITO, well, this was a legitimate entry for ProShares Bitcoin because it went under 30, over 30, under the negative third, over the negative third. I did not buy it, but that is and it is a higher low under 30, over 30, which I like a lot as well. But as far as getting involved in this right now, it's already over 30 RSI. Berkshire Hathaway, well, this is actually, no, it's not legitimate, but it is a higher low V1. It is a 520 crossover. This looks pretty good, but as far as an entry point right now, nothing. Bitcoin, very similar to BITO, under 30, over 30, higher low. Again, this is pretty good sign for Bitcoin, but nothing that I see here right now because it's already triggered the trade. Budweiser, wow. Don't really see anything here on Budweiser. I need an under 30, over 30, or a close back over the 200-day moving average, so I'm not going to mark that. Beyond Meat, under 30, over 30, so fairly decent setup here. False breakout to the downside, but as far as for next week, this would have to go under 30, over 30, so I don't really see anything right now. Caterpillar, did this go under 30, over 30? Let's take a look. No, it bounced right at the 30 RSI. I will mark Caterpillar if we get an under 30, over 30 next week, so let's mark this one. Cameco, under 30, over 30. There were a lot of buy signals on Friday. Probably too late to buy this one. Next week, if we went under 30, over 30 again, that would be legitimate, but let's see if we can see something that really is kind of easier to see till we can pay attention for next week. Carnival Cruise had this nice move up, big move down. Don't really see anything here. DoorDash had an under 30, over 30, V1, rejection of the negative third ATR channel. It's barely above the 30, so that is legitimate. But if we have a pullback next week, then we could potentially retest the 30. So I'll mark that one. The Dow Jones did have a close over the 250-day moving average. That is a legitimate entry signal there. Conversely, if we closed above the 200-day moving average above the black line, that would also be legitimate. So we'll mark that one as a possibility. Disney, same formation as most. Move back down, sideways motion. Under 30, over 30, that's a legitimate entry signal there, but the signal is already passed, so we'll skip that one. DocuSign, under 30, over 30. So a lot of these charts in here this week are going to look like this, so I'll just skip over here. Etsy, 26.96. If it closed above the 30 RSI, that would be interesting, so I will mark that one. Facebook, same pattern. Don't really see anything here for next week. We do have earnings coming up as well. FCX, boy, look at that. Barely closed over the 30 RSI. I will mark that one in case we have if we retest the 30, then that would be a legitimate entry. Fiverr, 25.98, don't really like that. Gold, really been beat up, my gosh, just straight down. I will mark gold for next week. I would feel very comfortable buying gold with an under 30 over 30. It's 41.76, so we'll just mark that one. GNRC, ooh, look at this, 29.23, nice V1, rejection of the negative third ATR channel, so we'll mark that one. Google does have earnings coming up, but Google with a close over the 200 would be legitimate. So next week, if we have bad earnings and it goes down, I would buy with the retest of the 250 or a close back above the 200. So we'll mark that one. Goldman Sachs, nice higher low V1 under 30 over 30. That one's already triggered. Home Depot, don't really see anything likely here. Retested the 200 just like this. Look at this, got right to the 200 exactly. Buyers came in and bounced, but nothing really looking like for next week. IBB, this is a nice signal here, under 30, over 30, V1, similar to the other ones I took. Gonna let that one go. INDA, boy, look at this huge move up, huge move down. Under 30, over 30 would be legit, or a close over the 250. So we'll mark that one. Intel, 30.67. If it did go under 30, over 30. Next week, if it closes back under 30 and then back over, then that would be interesting. Hey, yeah, really sorry. If you could just give me about 20 seconds, I've got to handle something. I'll be right back. Okay, sorry about that. Okay, I'm home alone and I needed to handle that. So Intel, 30.67. Next week, if we have a pullback, we could go under 30, over 30, so we'll mark that one. IWM, bought that on the weekly, but on the daily, it's legit as well. False breakout to the downside, under 30, over 30. Not going to mark that because I already have it. Johnson & Johnson. If Johnson & Johnson pulled back to the 200-day moving average, that would be my end of day stop. That would be good, but it doesn't really look like, so I'm going to skip that one. JO, which is the coffee ETF, don't really see anything there. CarMax, looks like we went under 30, over 30. This is a very good signal, but for next week, it would have to come way down to get interested. So there's not going to be a lot of potentials here. Look at Coca-Cola. Wow, look at that. Moved back into the value zone. Had a V1. This is good, but it's too chasey, so I wouldn't take that. Lockheed Martin has just gone straight up parabolic. This one's just way too chasey for me to get involved with. Love, which is Southwest Airlines. If we can move back up into the value zone, have a pullback, go for a higher low V1 or V2, but for me to really get interested in Southwest Airlines, I'd want it to come down here in the 30 RSI range. That would give the best risk to reward ratio. Lyft, also legitimate entry signal, just beautiful patterns here. False breakouts to the downside, V1s, won't mark anything there. MasterCard, my gosh. Well, it's close over the 200-day moving average, but it's way too extended, so I don't see anything on MasterCard. McDonald's also very, very extended. We had a huge day on Friday. Nothing really here that would get me interested in McDonald's. MERC would need a pull back to the 200-day moving average, so nothing on MERC, and I already have that on the weekly. Microsoft, of course, I bought this back on the 26th when it was a good risk to reward ratio. See, the risk to reward ratio near the 200 was good. Am I going to chase it up here? No, I already have it. But now that we're into the value zone, if we could pull back higher low V1 and V2 or retest of the 200, I would also buy Microsoft. Netflix, boy, my gosh, it's a 20 RSI. Where would I get interested in Netflix? Well, it would have to get up to the 30 RSI at the very least, but then it's going to have had a strong move from 20 to 30. Just going to stay away from Netflix at this point. Nike, nice higher low V1 here, but I don't see anything for next week. NVIDIA would have been a legitimate entry signal on Friday with the close under, close over the 200-day moving average. If it came back down and retested the 200 a little bit closer, that would be interesting. So I will mark NVIDIA. Pfizer, don't really see anything here on Pfizer. PKI, that's a legitimate entry right there. See the close under, the close back over the 200 with a good risk to reward ratio. There was a lot of signals on Friday. So if PKI closed back under the 200 and then closed back over, that would be interesting. We also have earnings, so I wouldn't want to do that prior to earnings, but we can mark PKI. PLTR, 2207 RSI, would need to get above the 30 RSI, so I'll pass. Philip Morris, really strong here. I mean, my gosh, but I would have to wait for a pullback into the value zone, sideways motion, V1, V2 to get interested. PayPal had a nice under 30, over 30 like a lot of the other stocks did. It has earnings coming up, so I'm going to pass on that. The Qs, I did take the Qs on Friday because of the same patterns, under 30, over 30, higher low V1, rejection of the negative third ATR channel. But to get interested in the Qs here again, it would have to go under 30 back over 30, or a close over the 250, or a close over the 200. So I will mark that because that is potentially possible. Rio, decent little entry point here with the rejection of the 200. If we closed under the 200 and close back over, that would be interesting. So I'll mark that one. Shopify, we're at 2970. So we are close to that 30 RSI. If we could close over the 30 RSI, that would be interesting. So I'll mark that. SIVB, under 30, over 30. It's already happened, so I'll skip that one. SLV, we already went over AGQ, but an under 30, over 30 on SLV. I prefer to buy the AGQ because it's double leverage, so I'll skip here. Snapchat had a big move down, sideways motion. If we could close over the 30 RSI, that would be interesting. But again, earnings are coming up, so I think I'll just skip that. SPCE 2301 RSI, would need to close above the 30 RSI. I will mark that. SPY, close back over the 200-day moving average would be legitimate, so I'll mark that one. And we'll go over these again. Teladoc, under 30, over 30. That one's already triggered. Teledyne, 2624 RSI, so we'll close over the 30 RSI would be interesting. TLT, don't really see anything on TLT. Tesla, of course, I already took Tesla because of the rejection of the 250, the rejection of the 200, the rejection of the negative third ATR channel, the rejection of the 30 RSI, and the V1. That was one of my favorite, and that's why I bought it. Twitter had an under 30, over 30. How about we mark Twitter? Earnings are a little bit further out, but if we came back next week and went under 30, over 30 again, that's where I would buy Twitter. Unity Software down at 25.04. So let's mark that with a close over the 30 RSI. UAL, nice big bounce right at the 30 RSI, but I think the train's left the station on this one as far as good risk to reward ratio. UNG, look at natural gas, just had a huge big move up here, way too high for me to get interested. UNH, nice little higher low V1 that happened here. That's legitimate, but it's already happened, so I'll skip. USO, very extended. I would need to pull back into the value zone, some sideways motion, V1, V2, so that doesn't look likely. The dollar been very, very, very strong, extended. For me to get interested in the dollar, I need it to pull back into the value zone. The VIX, boy, been a wild ride on the VIX. And for me to get interested in the VIX, return to the value zone, sideways motion, V1, V2. So I will mark that one as potential. Verizon, nice move on Verizon, but I don't see anything for next week. WBA, nice little bounce off the 200-day moving average. This would need to come back to the 200 retest. We had this big down bar. We're halfway. I would expect Walgreens to kind of stop right there, so I will skip that one. Walmart, big reversal day, made this low here, reverse back up. It's a little extended. Energy, this is the energy ETF, return to value, V1, V2. So I'll mark that one. XLF, which is the financial, had a nice intraday rejection of the 200-day moving average. If this were to come back test the 200, give you a better risk to reward ratio, I would be interested, so I will mark that one. XLRE, boy, has this fallen. Look at this rejection of the 250, close back above the 200 on XLRE. I've been looking to get back into this, but I did not take this on Friday because I took the other positions. But again, if we could close back under and then close back over, that would be interesting. So I'm going to mark it. XLU, the same, basically. It had an intraday rejection of the 200. Look for a pullback, but I won't mark that one. XLV, very nice here. Close under, close over the 200-day moving average. That's a legitimate entry right there, but I will mark this one for next week because if it does close under the 200 and then close back over the 200 again, then you could buy it. EXON on the daily, of course, I already have this on the monthly, too far extended. And Zoom, where is Zoom? Look at Zoom. Zoom did go close under 30, over 30. That's legitimate, but next week, if it closes under 30 and then back over 30 again, I could be re-interested. So, all right, let's take a look quickly back over the stocks that I did flag. So basically, this is kind of the watch list for me next week. So AGQ, it's 39.63. If we went under 30, over 30 next week, that would be my entry on AGQ. ARC is at 28.25. If it closed above the 30 RSI, then that would be a legitimate entry for me to get into ARC next week. And it is close, so that's why I marked it. Caterpillar. If we could go under 30, over 30 on Caterpillar again next week, that's what I would be looking for. And under 30, over 30 next week. DoorDash, it's at 30.35. So it's a valid signal on Friday, but next week, if it closes back under 30 and then closes back over 30 again, that would be legitimate entry for the way that I trade. DIA next week, if we came back, retested the 250-day moving average, that would be one entry signal. Or if we got a close above the 200-day moving average, that would be the second. Etsy, 26.96. So if we get a close back over the 30 RSI next week, that would be legitimate. FCX, 30.12. If we went under 30 and back over 30 next week, that would be legitimate. Gold, if we go lower and go under 30, over 30, that would be a signal. Or conversely, if we could close back above the 250-day moving average or close back over the 200-day moving average, that would be the entry signal, and then that would be my end of day stop. GNRC, It's 29.23, so we'll close over the 30 would be legitimate next week. Google, close over the 200-day moving average. That would be legitimate, and then that would be your end of day stop. Or if we came back, retested the 250 next week, that would also be a legitimate entry point. Keep in mind, it does have earnings on the 1st, so I would have to basically wait for that to happen. INDA, next week, if we went lower with an under 30, over 30, that would be legitimate. If we went higher, close over the 250, that would be valid for me, or close back over the 200. Intel, it's at 30.67, so if we went under 30, over 30 next week, that would be legitimate again. NVDA, NVIDIA, it already triggered a proper signal yesterday, but next week if we pull back, retest the 200-day moving average, that would be an excellent risk to reward ratio. If we went lower and rejected the 250, that would also be legitimate there as well. Or if we went under 30, back over 30. So keep in mind, this is already triggered, but I'm just saying next week, if we retest the 200 and get a better risk to reward ratio, that would be legitimate. Or if we retested the 250. PKI, next week, if we pull back, go under the 200 and then back over the 200, that is something I would be looking for. But keep in mind, there are earnings coming up, and don't buy and hold through earnings. The Qs, if we go higher and close above the 250, that would be my signal for next week. And or if we close above the 200, and or if we go back under 30, over 30. Rio Tinto did reject the 200, but next week, if we were to close under, close back over again, that's where I would be interested there. Shopify, 29.70, so very likely if it closed back above 30 next week, that would be a legitimate entry signal. Virgin Galactic, 23.01, we'd have to close way above the 30 RSI. But if it did, and it took a while to get there, then that would be legitimate. The SPY, of course, this one's very close to happening here. It was not able to close above the 200-day moving average, but next week, if we close above the 200-day moving average, that would be a legitimate signal for me. Or if we come back down, retest the 250, that would also be. Teradyne, 26.24, close over the 30 RSI would be a signal next week. Twitter, already triggered yesterday with an under 30, over 30. It's 31.34. So next week, if we had to close under and close back over the 30, then that would be legitimate. Unity Software is 25.04. If we closed above the 30, that would be an entry signal for next week. The VIX, I don't know if the volatility is over. I think you could make a case that we may have a bottom in, but you never really know. But for me to get interested in VIX here, we had this big move up, pull back. If we could pull back into the value zone, move sideways, then look for a V1, V2 entry. That's where I would be interested in VIX. XLE, lost the 70 RSI. For me to get interested in XLE, return to value next week, sideways motion, V1, V2. XLF, if we could come back next week, retest the 200, and ideally get a better risk to reward ratio, that would be interesting to me. Real estate, if we could, we're above the 200-day moving average, but if we could close below it and then close back above it again, that would be a new fresh entry signal. Healthcare, again, it did trigger the proper signal on Friday, but if we could get a close back under and then a close back over, or another retest of the 250, then that would be the signal. And then Zoom, under 30, over 30. So that's legitimate right there. But next week, if we close under the 30 and back over the 30, then that would be a new entry signal. So yeah, it was a volatile week. Have we put in a bottom? Boy, I don't know. I really don't know if we put in a bottom. I mean, there's some indications to show that that may be the case. There was, on Friday, there was a lot of buying, a lot of volume. So that is a good sign. But on some of these potentials for next week, a lot of them triggered on Friday, but they could untrigger and then re-trigger next week. And so that's what I'm going to be looking for. So Anyway, hope this is helpful. Just want to remind everybody that I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I'm a great teacher. I've been teaching for years. I've taught so many people from around the world, and really good feedback, really good ratings. And I've turned out some really great traders, and I teach a great course. It's 15 hours long, 5 sessions. Each session is 3 hours. And again, we do that in the evening time via Skype. I teach you all 5 of the different trading approaches that I use and have used for the last 25 years. I teach you step by step. It's very important to me that my students succeed. I just want people to succeed in trading. You know, when I started out 25 years ago, it was not easy. And so that's one of the reasons I started the live podcast. It's one of the reasons that I'm continuing to do the weekend podcast, is because I want to help people understand trading and not go through the horrible things that I went through 25 years ago. So, you know, if you take my one-on-one course, I know you're going to be a better trader. I promise you, because I'm going to teach you step by step all 5 of the different trading approaches that I use. I throw a lot of curveballs at you. I ask you a lot of questions. We do a lot of simulation trades, but it's an excellent way to gain a new skill in trading. And so if you're interested, all you have to do is send me an email. My email is in the description of this YouTube video. Just reach out to me, say, hey Greg, I'm potentially interested in taking your course. I will reply and say, hey, that's fantastic. Let's set up a Skype call. The Skype call is free. It's not a sales call. I promise you that. I just want to learn more about you and your trading, your challenges, your goals. And it's a good time for you to ask me any specific questions about the course. And when we're done with the Skype call, you think about it as long as you want. One morning, you wake up and you say, hey, today's the day. I really do want to learn from Greg. Just email me. We'll get it scheduled. Now, the course does cost $1,750. I know it's a lot of money, but you get a lot. You get a lot for the money, and it really is an investment for you. And I promise you it is worth every single penny, because, you know, you get me for 15 hours challenging you, teaching you, and you're just going to be a better trader. Okay, so if you're interested, just send me an email. Secondly, I have a great course available on udemy.com. It's an online video course, very affordable. It's only like $12 or $15. I teach you the deep dip buy stock trading strategy. That course has gotten so many good reviews, so much good feedback from all over the world. I teach you step by step the deep dip buy stock trading strategy. It is a great strategy. A lot of these strategies that I've been, actually all the strategies this week that I've been using are exactly the deep dip buy. It's very affordable, the $12 or $15, but don't let that fool you. There's a lot of content. There's 9.5 hours of video. There are 26 videos total. There are 15 study guides, and it is just a best way to start trading. The one-on-one, of course, is the best because I teach you all 5 of the approaches. But if you're just getting started, don't want to take on too much, just buy the Udemy course. The link is in the description. It's very affordable, and you are going to learn a lot. So I think that's it. Oh, I guess, and lastly, if you like this weekend edition of the podcast, if you wouldn't mind hitting the thumbs up button, I would really, really appreciate it. It helps the channel, lets YouTube know there's some valuable content here. So this week there were a lot of signals that happened yesterday. Hopefully the flagged symbols that I flagged today will give you something to look at next week, but a lot of them have already triggered. What I'm looking for is a untrigger and then a re-trigger. I only take one position generally per day. I did take 2 on Friday. Don't do that usually, but there were such good signals. But generally, I like to take 1 signal per day. I just like to narrow it down to the best signal. I don't like to buy bunches and bunches on each particular day. So a lot of these have triggered. I could have bought 4, 5, 6 if I wanted to, but I don't want to buy too many on one day. Ideally for me, one a day is the way to go. So with what I marked here for the flag signals, for the potentials for us to look at, most of these have already triggered, just looking for them to untrigger and re-trigger. And if any of these untrigger and re-trigger, I will be adding as well. So anyway, I appreciate you being here. I hope you have a good rest of your weekend. Be good, be safe, drive safe. go out and do something nice for someone today. If you could go out and also do something nice for an animal, that would be great as well. I'm a big animal lover, and they like compassion and acts of kindness as well. But if we all went out and did something nice for another human being, we all went out and did something nice for another animal every day, it really would make the world a better place, as Martin Kornfeld says. So anyway, if any of you have been listeners of my live stream, I really miss you guys. I miss doing the live stream. I really do. I hope this weekend podcast, the tape podcast, is helpful. I mentioned that I did get a trading position, and it's a great position. It's a great opportunity. I do enjoy it, but they just required that I can't do the podcast in the last hour, which makes sense because I'm trading. I'm trading a lot of money, trading large positions, and I need to focus. But last week was a good week. Day trading was great, and very, very thankful for that. So in the coming week, please be careful. We've had a lot of volatility. Maybe the bottom is in, but maybe it's not. Keep your mind open to the fact that it may not be open. Position size correctly. Try to take your one trade per day, and follow your rules more than anything. So like I said, if you liked this podcast, if you wouldn't mind hitting the thumbs up button, I really would appreciate it. Check out the Udemy video, the Deep Dip by Stock trading course that I have. The link's in the description. And keep in mind, if you want to get serious, really want to learn this step by step, and have a coach and a mentor that you can work one-on-one with, just send me an email and we'll set up the course. So I think that's about it for today. I really hope you have a great weekend. I hope the bottom of the market's in. I know it's been difficult. So thanks again. And I hopefully, God willing, we'll see you next weekend. And if you have any questions about anything in this video, feel free to send me an email or comment in the description, and do my very best to help you out. Okay, so on the way out here, I have to run that last legal disclaimer, but take care, everyone, and have a great upcoming week. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.